All right. Well, good day, everyone. We want to welcome you to one of PrimePay's monthly broker webinars. Today's title is Preparing for the Impending ACA Storm. And yes, folks, this is a named storm. It's the ACA Repeal and Replace storm. So we have our first official storm of the year. But please do not worry, be not afraid. Actually, there is plenty of sun above these clouds, and we look forward to sharing about some of that sunshine here with you as we progress here today. My name is Steve Jackson. I'm the Senior Vice President of Strategic Development and Channel Sales here at PrimePay, and I want to welcome you to today's webinar. We thank you for taking time out of your busy schedules to sit with us today. We're coming up to our 9th anniversary of providing these monthly broker webinars on the first Wednesday of each month. And as has been our history, we make an attempt every single month to be able to provide strong regulatory guidance, specific sales strategies, plan designs, things that are causing a lot of confusion out there. And what we attempt to do is to kind of break that down ultimately into practical application, because at the end of the day, we want you to be able to take this information and be able to communicate it effectively to your clients and with your clients and prospects. So today is no different. We've got some great content here for you today. And before we get started, I do want to cover some of the logistics of our webinar. As you can see, we have muted your lines. However, we do want to hear from you. There is a question box in your GoToMeeting menu bar there, and what we would ask is that you go ahead and type in your question during and throughout this webinar here today. We have a special guest speaker in which I'll introduce here just momentarily, and there's going to be some great content here, and I am sure from previous webinars that you're going to have some very good questions, and we should have ample time today to be able to address some of those specific questions. And if some of those questions are more direct, more specific, to a specific client need or something of that nature, we will do our best to connect with you offline and drive some answers to your questions there. Also, one of the top questions that I get is, hey, are you recording this webinar? So never fear. We record these webinars, and we will be posting this recording on our public Broker Concierge YouTube channel. They're usually posted here by the end of the week, and we will send a follow-up email just to inform you when that specific link is ready to go. But generally, it's there and available by Friday, usually by the end of the week. So we'll follow up with some key things here at the end of the webinar today, but let's go ahead and get started. As I was thinking about the webinar here, there's some planning that goes into these subjects, and it doesn't happen overnight. And as the Trump administration kind of took hold, we were like, wow, we need to talk about that first 100 days, right? And boy, a couple weeks ago, we thought we were going to go down a different track, and things have changed. But we have some fantastic information to provide to you today. And so before I get into the agenda, I actually want to introduce our special guest speaker here today. Ann Duke is our Director of Regulatory Compliance here at PrimePay. And her career has spanned a lot of different experiences, but her career in employee benefit administration includes a strong emphasis on ACA compliance. Her past experience combines turns as a general counsel of an employee benefit firm and a founding investor, senior vice president of a de novo bank, where she implemented and managed FDIC-mandated policies and procedures. She currently serves as a county treasurer, which is an elected position. So she's got some great experience as it relates to politics. And her combined legal and executive experience really allow her to develop internal procedures that are both fully compliant and business friendly. She has been a welcome addition to our team here at PrimePay. You guys all understand our emphasis on compliance, and to have someone with the breadth and depth of experience that Ann Duke has, we are thrilled to have her on our team. So Ann Duke, we want to welcome you here today to our webinar.
Thanks very much, Steve, and good afternoon, everyone. Today's going to be fun for me because we're going to talk about the ACA, and certainly, as Steve said, I do study and practice in the area of ACA compliance and regulatory compliance, but I'm going to have the pleasure to talk to you today about the political dramas that have been going on around the ACA and repeal and replace also. So we're going to hear from Steve for a bit, and then Steve will turn it back to me, and I will give you hopefully a fun breakdown, an interesting breakdown on what's been going on politically, and maybe a little civics lesson that will serve you well going forward. Thank you.
Fantastic, Ann. We're looking forward to that. And so just to round out the agenda here today, as Ann had mentioned, I'm just going to touch a little bit, just for a few moments, in the current environment. I want to touch on a few key things in the current environment that I do want you to take notice of. And then Ann is really going to get into that policy versus politics discussion, right? That first 100, well, okay, we're not quite there yet, but we're getting closer to that first 100 days, and as it relates specifically to ACA, okay? And then we want to kind of wrap up here. I'll kind of come back and talk a little bit more about the, okay, those items, okay, we now understand that, but what now? And as I mentioned before, we will take some Q&A here at the end, but we would love to hear from you throughout the webcast here today. So as Ann is talking, as a specific content piece is brought up and you have a question, feel free to go in and type out that question, and then we'll be sure to address that. So what you're also going to notice here in our webinar today is you're going to see some sunshine there. We started out with the gloom and doom, but I want you to think of it in this light. It's now spring, and there's a lot of spring showers. It brings a lot of thunderstorms, some lightning. I mean, there's a lot of bad stuff that kind of comes with that. But after every storm, right, the sun comes out, and the sun is shining, and there is a silver lining. There is absolutely some daylight in the information that we're going to share today. Even though it's clouded with a lot of policy and politics, we really truly hope to shed some sunlight in on the discussion, on this particular discussion here today. So let's go ahead and get started about the current environment. And as President Trump took office, there was one thing that he did immediately, and that was sign an executive order. And this executive order actually caused some very good confusion, certainly with our clients, and I'm sure it resonated with your clients as well. And actually, you might have read the executive order and what it entailed and said, well, what does this mean? We have Obamacare, we have the Affordable Care Act, it's the law of the land, but here President Trump signed this executive order that was to minimize the economic burden of the Affordable Care Act pending its repeal, right? So thus began that conversation in Congress to begin some type of repeal, replace, remove type of strategy. So this particular, I just want to touch on a couple things with this executive order as to what kind of caused some of that confusion and what we see out there today. So the order, this executive order, was designed to weaken regulations and procedures associated with the enforcement of ACA, and it actually was broken into six different sections. Okay, but I'm only going to cover a couple of these here that I thought, at least for our talk here today. So one of the first sections was it made an attempt to seek efficient implementation of the law and focused on removing regulatory burdens during the repealment process of the law. Okay. The next thing was he had stated, okay, HHS and heads of other U.S. executive departments should either waive, defer, grant exemptions, or delay implementation any requirements of the act that would place fiscal burdens on the taxpayer and or certainly the employer. Okay, saying all the things, right, that we would love to hear. And then lastly was those department heads were also ordered to grant greater flexibility to states seeking to implement healthcare programs. So as you can see right out of the get-go here from the start of this year, this executive order put forth a lot of confusion. The IRS basically came out then and stated that it was stated that they would not require tax filers to state whether they had compliant insurance, which kind of allowed them to avoid the penalty fine, right? So I'm going to follow up here after Ann's comments in regard to, well, this executive order came out, but it is not the law of the land. And what are some of the key requirements that employers still need to fulfill as part of their obligation under the law? But this executive order was a really big deal right out of the gate and caused a lot of confusion. Next, another thing that I think is at least important to say, this does affect many of you, but not all of you, but there, even at the end of the year, they had come out and stated that the grandmothered plans would also now have an extension. And so there's an estimate out there that there's still roughly about 1.2 million people in the United States who have coverage either under a grandfathered or grandmothered health plan. Okay. Now, grandmothered plans must comply with more ACA regulations than the grandfathered plans, and it includes such things as preventative care with no cost sharing, eliminating the annual benefit limits for any of those essential health benefit plans, so grandmothered plan statuses came in place here in 2013. HHS extended the renewals of these grandmothered plans, and it extended it to policy years beginning on or before October 1st, 2018. Okay. Now, there are over 35 states today that permit renewals of grandmothered plans. But just so that you're aware, out of the remaining 15, there they are. So they're listed here on the board. These current states do not permit renewals of these grandmothered plans. Now, because of the, I don't know, as a benefit broker and as a consultant, you may have great involvement in these. You may have very little involvement in these. But these extensions really, again, drive some additional confusion as to what is permitted, what's not permitted, and some states are following along and many others are not. So it's definitely good information to have. Also, as we think about the current environment, I don't want to steal Ann's thunder here as she's going to talk a little bit more about this, but I did want to bring it to light here a little bit more, just kind of set the stage. But as part of an overall repeal replace strategy, there is significant discussion as it relates to the employer-sponsored coverage tax exclusion. Okay, so is it truly on the chopping block? Are we going to see this shift and change? What does this mean from an employer perspective? What does it mean from a broker perspective? Okay, as you're out there delivering these health and welfare benefit offerings to your employers. So just a couple factoids here in regard to this, and I'll let Ann touch a little more on this important piece. So this exclusion cost the federal government an estimated $260 billion in income and payroll taxes in 2017. It makes it the single largest tax expenditure, okay, that is out there today. So you can tell that it's very significant, right? As we talk about repeal, replace, a big portion of the conversation is around funding. Who's paying for what? Who's responsible for what? How are we going to come up with this money to be able to fund that or this, right? So this is something that's being discussed very widely. And just a couple other things, replacing this exclusion with a tax credit, which has been, certainly proposed. Those for it would say that it would equalize tax benefits across taxpayers in different tax brackets, but also as well as between those who get their insurance through their employers, or who might obtain those, that coverage maybe from other services, through other sources rather. So this particular topic in the current environment is it's a very this is a lightning bolt right now in this impending storm, and I'm going to let Ann dive just a little bit deeper, certainly into it, shed a little more light here. But I do want to let you know that this is a very important, very prominent topic there in Congress here today. The Qualified Small Employer HRA. Boy, what a nice option! What a nice removal of a prohibition that had been put in place back in 2013. As you guys are aware, the 21st Century Cures Act kind of brought to life an HRA that could be established for qualified small employers. And so here's what I just want to say of this. So in this current environment, you have employers today who are either resisting change, they need to change, they need to offer group health plans, they can't offer it any longer. In your prospecting efforts, you might be finding employers that can or cannot afford to go down the path of offering a group health plan. And so a qualified small employer HRA, or otherwise known as a QSERA, is a great option for those non-ALEs, those non-applicable large employers, to give them the ability to be able to reimburse now as an employer in providing a benefit amount that could reimburse individual medical premiums of their employees, and could also reimburse out-of-pocket medical expenses as well. So it is a fantastic option. Is it the right option? I think we all would tend to agree here on this webcast here today that an employer that's offering a group health plan, they're in a much better spot, right? In being able to attract or retain employees for their company. But this is a very welcome and a great opportunity for small employers to provide a nice benefit while not providing that group health plan. So again, in this current environment, it's a very nice option here for your small employers. And lastly, and I'll touch base on this here, near the end, again, and I know Ann will talk a little bit about it as well, but I want to bring up a topic that is really showing bipartisan support. Certainly, Republicans have been really talking up the health savings account, the expansion of health savings account. And I do want you to know that in this current environment, if you as a benefits broker have not taken the opportunity to truly begin to know the use, the opportunity of, or what a health savings account is and can bring to your clients, you need to start taking notice, because throughout all of the conversations that have been made, we will see an increased use and restrictions being taken off of health savings accounts. And these will be much more widely used than what we have seen in the past. And I think as an agency, you are looking for ways to continue to drive value to your clients. And one of those is making sure that you as an agency understand the use, how to use health savings accounts, but also begin to partner with those entities who can deliver on those specific accounts as well. All right. So I don't want to steal too much thunder here from Ann. I want to go right into kind of Ann's topic here today, which is really covering this legal landscape, kind of taking a look. There's been a vote, non-vote, been a lot of executive orders, but Ann, I am sure you're going to clear up the clouds that are kind of in our head here, and hopefully shed some light on what is coming or what has transpired.
I will clear this up as much as you all believe that Washington is clearing this up. I think that's a big burden to put on me, because it's a mess. It's going to be a mess for a while until Congress and the White House figure out what they can do, figure out what just happened in the last several weeks when they had legislation actually on the table. And I'm saying it's a big mess. It's democracy. There are a lot of debates. There's a lot of horse trading. There are a lot of policy issues. So no one should certainly no one should despair. We're just watching, a major piece of legislation that affects 1/6 of our economy. Several major pieces of legislation go through the process. as Steve said, the first 100 days have been very interesting, not only in healthcare reform, but in everything. And you all know that. You know, if you turn on the radio or watch TV for 5 minutes, any of your news channels, you know that things have been changing daily. I looked up today, we're in day 76 of the first 100 days. As Steve mentioned also, if Steve and I had scheduled this webinar 2 weeks ago today, we would have prepared something about the American Health Care Act and how it was going to affect employers and affect brokers and all of that good stuff. So 2 weeks ago, we would have had a completely different discussion from the one we're about to have with you today. As Steve said, there was the American Health Care Act was Republican legislation that was proposed and is, you know, the subject that's been, you know, dominating the news until, I guess, last Thursday or 2 Thursdays ago, I'm sorry, or 2 Fridays ago when it was pulled and there was no vote. I'm going to talk about that process because I think it's important for you to understand it. There's going to be a lot of sausage making goes on in front of our eyes over the next, you know, several years. Certainly the Congress is in place for 2 years before they go back and seek re-election. President Trump is obviously there for 4 years. So we're going to see a lot of sausage making on a lot of things. And what we just went through politically and policy-wise with this American Health Care Act is going to apply to a lot of the things that we're going to see coming forward. So, you know, I kind of joked with you a little bit about a civics lesson. I think it's at least a political lesson that you can learn today to apply to all the topics, but certainly you can apply it to all the healthcare reform topics coming up to anticipate, you know, what you need to know to help your clients. It's important to note, and we all know this, that we have Republican control of the House, of the Senate, and of the White House, and all of them ran and campaigned very vigorously and very vociferously about repeal and replace. I mean, how many times have we heard repeal and replace? I was thinking earlier today, we started out however many years ago with 13 Republican presidential candidates to a person, repeal and replace. And so now they're all elected, they're all in place, they're all Republican, and we're having a very hard time getting to repeal and replace. And what that means is that something is inevitable. Repeal, replace, reform, something. There's no way that all of those people can go back to the voters to run for stand for re-election without having done something. So I want to turn to, you know, the first kind of meaty part of our discussion today. This is an interesting statistic. It applies to you. It applies to you directly as brokers, but it also applies in a larger way to what we just saw with the legislation. So the first bullet point there is 50% of Americans have health care coverage through their employers. That is your sweet spot, that is your business, and that is, you know, half of Americans have their health care coverage through their employer. And as Steve mentioned, there is a lot of conversation and a lot of an issue that is not even close to being settled is whether employers are going to be able to continue to deduct the cost of coverage. And that will have an impact certainly on what you do and certainly what employers provide. But I would say to you this, and this is not settled, and this is just my expertise as a politician as much as my expertise as an attorney. 50% of Americans is a very big number, and you're about to hear that Congress doesn't have a whole lot of stomach for disrupting health insurance markets, even in the individual market. I would find it highly unlikely that in the foreseeable future, 17, 18, maybe 19, that is even going to be a possibility. That being said, as Steve said, it is a very, very expensive deduction, very expensive hit to the income, the revenue that goes into the federal government. And so at some point it is going to be discussed. But when I talk to you about how crazy and how not dysfunctional, but how complex the conversation is right now today, you will see that politically I don't think that's the low-hanging fruit for Republicans at all. Second of all, some of you may remember when Obamacare was enacted, there was a lot of speculation that employers would drop coverage and just pay the penalties because the coverage was going to be so expensive. And I've seen a lot of very persuasive studies that have countered that. A lot of studies have been done, and what really happened is, yes, the cost of coverage has increased and increased, but employers are holding on to that for a couple reasons. One, it's kind of baked into our culture now that if you were employed, particularly by, you know, a larger employer, even 20 or more, that employer is going to provide some kind of health care coverage for you, and it's a cultural thing. It continues to be a very strong employee retention tool. And, you know, in some sense, it's in lieu of wages, is this health care coverage that is supplied by the employer. So, yes, that conversation is going to happen, the deductibility of the employer coverage, but I think we can rest easy now. Just, you know, stay tuned, keep your ear peeled to it. I know you all are, but those are kind of my thoughts that I'm bringing to that particular bullet point today. So you have 50% of people receiving health care coverage through their employer, and an additional 35% of Americans receive public funds or receive their health care coverage through a public program like Medicare, CHIP, you know, what have you. So 85% of Americans are covered through those two outlets. The remaining 15% of Americans access their health care through the individual market. And what is interesting and important about that is the individual market is basically what drove the Republican bus off the cliff 2 weeks ago and caused that vote to be pulled. And so we need to talk about the individual market. Now, we have the Affordable Care Act. I want to talk to you today about how the Affordable Care Act handles the individual market, and I want to talk to you then about how that proposed American Health Care Act handled the individual market. The Affordable Care Act, as you probably all know, has an individual mandate, and it provides subsidies to allow people to comply, people with low income or different types of financial needs. Those subsidies allow those individuals to comply with the mandate. And the federal government supplies those subsidies to support, or supplies those subsidies through expansion of Medicaid. And what happens there is the federal government will ask you what your household income is, and they will compare that to a federally devised scale. And they will come up with a number, and then they will apply that number to the cost of coverage in the marketplace in which you're applying for coverage. And they will take those factors and determine an affordability number. And anything over that affordability number for that family or individual is subsidized by the federal government. And there is no limit on that. It is basically a blank check. And it's a blank check, so there's no pressure on anyone to reduce costs or be more efficient. It is just simply a blank check, and it is very expensive, and it's causing a lot of the problems that you're hearing about right now. So the American Health Care Act is the Republicans' answer to that, and it's really a very much significantly different structure. The American Health Care Act proposal was, first of all, there would be no individual mandate, and instead of subsidies, there would be tax credits. And the way that works is, I have an example I use. If you are a household and your federal income tax liability is $4,000, and if you meet certain benchmarks that are baked into this law, you may receive a subsidy or a tax credit, of say $2,000. And the practical effect of that is your tax liability is $4,000, and the government, so you pay $2,000 to the federal government in income tax, and the other $2,000 is credited back to you to allow you to help you to purchase individual health care coverage. So that's the first piece of it, how it affects the individual. How it affects the federal budget is through block grants, and this is significantly different from the ACA. The block grant is basically a budgeted number in the federal budget each year, every 2 years, whenever they do their budget reconciliations. It's a finite number. It's the number that Congress believes the American people should contribute to the individual market. And then what they do is they go to each of the 50 states and they determine a per capita number. So Steve and I today are in Pennsylvania. So they would go to Pennsylvania and they would assess Pennsylvania's Medicaid needs and their per capita usage, and they would determine a number for the state of Pennsylvania. And the federal government would then just basically write a check to the Pennsylvania legislature and Governor Wolf. And what they do is they just write a check for a defined amount and say, you decide how best to make sure that your Pennsylvanians have health care coverage through the individual market. I'm going to leave it to you, the federal government is going to leave it to you, Pennsylvania, to determine the disparate needs, from Philadelphia to Erie to Chambersburg and State College to Pittsburgh. You look at your population in your state and you figure out the best ways to do this. And the effect of that is it's a limit on the number of funds on the amount of funds being spent, and presumably it would encourage state-by-state innovation based on their particular populations of people that they are trying to cover. So that's the individual mandate and the block granting, which is the subject of all of the shouting and fighting and debating that we saw over the last many weeks.
And there is, thank you, there is one question that had come up in regard to the tax credits, and I think just needs to be confirmed. Connie is asking, I understood that the tax credits were based on the 5 oldest family members with an annual cap for families of around 14,000. And I don't know if you're able to confirm that specific, if you recall, specific as to the tax credits.
Yes, that is correct. And there is, that is a sliding scale, but yes, that is correct.
Okay. And one other, I'm taking it more as a comment instead of a question, but Joe had asked or had stated, he goes, I'm just hearing a lot here about just status quo, quite a bit. And, he's concerned, that are we actually going to effectively make a change? And I guess due to this non-vote here right now, is that what we assume at this point, that we're going to try to keep somewhat of a status quo?
That's a really good question. Certainly right now we're in status quo, and I know, Steve, you're going to talk about that a little bit later, but yeah, I mean, right now we are in status quo, but again, I'll go back to my comment. All of those Republicans ran on repeal and replace, and so we're going to see some kind of reform, whether it's legislative reform, regulatory reform. I would be amazed if we didn't. The other thing I would say to you, to the questioner, is all of the Republicans favor block grants, and it is a very strong way to cap federal spending. It takes away the blank check that exists today. So I would not be surprised at all if we see some form of block granting. The devil's going to be in the implementation details, as we'll see as we go a little further in the presentation. But block grants are almost certainly going to happen in some form and fashion.
I guess one other question here, maybe before we move on to the next slide, is from Bill, and he's saying, again, kind of regarding the tax credit, I guess the question is, or that we get, is how do I find the money to spend until the tax credit is given back to me? So if you have necessarily a comment, toward that.
Yeah, that's something that would be fleshed out once they pass the actual tax credit. Some tax credits function as a refund, so the taxes are paid and then the tax credit is refunded back. Some are, an actual credit on your tax return where, it shows that you owe $4,000, but you're only required to write the check to the federal government for $2,000, and then you would be required to prove that the additional $2,000 was spent on qualified health care expenses, whatever those may be. So that's kind of the mechanism that will be worked out, but they have to pass that underlying tax credit legislation first. There's been some discussion, like everything else, some Republicans are in favor of one and some Republicans are in favor of another, like the government writes you a check back. There's a lot of policy and a lot of political philosophy that goes into that conversation also. And so I wouldn't even want to guess right now that if they pass tax credits, what that's actually going to look like.
Very good. Thank you, Ann. Before we move to the next slide, please feel free. You guys are doing a great job. Go ahead if you have a question for Ann, go ahead and go into the GoToMeeting menu bar, and you can type in your question, and we'll do our best to address it. I do see a couple questions that have come in that are a little more specific, so we might just take a couple of those offline. Okay, so we will get back to you, but appreciate the questions thus far. So, Ann, I'll forward here the next slide.
Okay, thank you. So let's talk a bit about what did happen and what was in play with both the policy and the politics. Again, it was really all over the individual mandate and or I should say the individual marketplace and the block granting. So just keep that in mind. You'll see on the right-hand side, I have a couple bullet points or 3 bullet points there about what exactly the fight was over and where everybody stood. The Democrats are sitting this out. This is a Republican fight right now, and I'm using the term fight very loosely. It's really a debate. It's a good debate. It's democracy at work, as I said. It sounds very loud and nasty sometimes, and so, sometimes it looks like a fight, and sometimes it looks like a debate. But that's really what's being slugged out right now, is all those issues surrounding the individual marketplace. So we're going to look at just the Republicans, only because the Democrats are sitting it out. We don't have a parliamentary system. We have a democracy, so there are a whole bunch of Democrats waiting to see what happens and waiting to weigh in. So the Republicans really divide across the spectrum, like all political parties do, but this was kind of measured and managed at the edges. You have your moderate Republicans on one side, and you have your conservative Republicans on the other. And the moderate Republicans are typically in districts that are, 50-50 or 60 Republican, 40 Democrat registration. Typically, the Republicans in those districts are more moderate, so they're a little less concerned about federal spending and that kind of thing. So you have those moderate districts, and what's important there is those are the people that have to go back every 2 years and really slug it out for their seat. They almost always have a fairly strong challenger, either in a primary or in the general election against the Democrats. So they need to be very much in tune with a divided district. And then on the other hand, you have conservatives. There's a particular group you've probably heard about, I'm sure you've heard about it, called the Freedom Caucus. A lot of people are pointing fingers at the Freedom Caucus for having this legislation blow up. So the Freedom Caucus can be anything from 150 members to 30 members, depending on the question or the legislation. In this particular situation, the Freedom Caucus was 30 members. And what we found out through reporting after the legislation was pulled was that those 30 members had made a pact, secret pact, that they would vote as a block, and they would not allow any themselves to be peeled off one by one with, a deal or, whatever the horse trading that goes on, whatever would come of that. They were going to stand as a block. And it was very interesting and kind of drove, what we're going to see in the next couple of comments. So the first thing is the Medicaid block grants. Like I said, all Republicans seem to be for that, but the initial legislation was very aggressive. It said we were going to go to a block granting system in 2018. And, we're sitting here in April of 2017, and, we all can see that's just very aggressive. And so the moderates were very much concerned about what the effect of that was going to be on the individual marketplace. Were people going to lose coverage? Were insurance companies going to bail out because there was so much more uncertainty and all that good stuff? And so one of the things, so the moderates were already starting to make a little noise that they were concerned about this, the pace. And so during a certain period of time, the debating and the horse trading started to happen, and that date moved from 2018 to 2020, and I don't know whether it settled on 2020 or 2022, but it moved out. But the underlying pressure and tension during that discussion was the CBO scoring. And what CBO scoring is the Congressional Budget Office is basically a team of economists who determine the effect, for any legislation, what is the effect on the American public and what is the effect on the economy and what does it cost. So the CBO score, you'll hear it, you probably heard it 100 times, and it became very important in this debate because these moderates were waiting to see what the CBO scoring was. Well, the CBO scoring came out, and kind of buried in the 10th paragraph of every article about the CBO scoring was a line that said, this legislation as it stands will save $337 billion over 10 years. We'll take that $337 billion out of the deficit. Now that was way down low. The headline that we all saw was, CBO scoring says that this legislation will cause 24 million people to lose their coverage. And the moderates just said, no, that is not going to work. And that's where you started to see, okay, the moderates are getting a little squishy. The Freedom Caucus and all the conservative votes are starting to get a little more important if they're going to try to get this passed. But the moderates held in, and they, like I said, they moved the date, and they did a couple of other tweaks. It's fairly complex legislation, so they did more tweaks to satisfy the moderates that individuals would be taken care of, and there would be a certainty there in that individual marketplace during the transition. But the Freedom Caucus now is starting to feel pretty good about themselves and sees that that block of 30 is becoming more persuasive because you're moderates, you're going to lose some moderates, and the more you lose moderates, the more you need those 30 votes. And so they started to really see their leverage increase. And so they went to President Trump, who was apparently very much involved in this whole process, talking very actively to all the members of the Republican Party, the Republican House. They went to President Trump with some muscles, right? And they said, all right, the next thing we want, the only way we're going to support this legislation is if you remove the mandate to require that requires 10 essential health benefits be covered in every individual policy. And I know all of you know what that means. You remember all that conversation about the 10 essential health benefits, including contraceptive coverage, mental health coverage. There are 10 things that are mandated to be covered in the individual market. That started really intensified the heat and the pressure, and it became very dramatic with, Trump, President Trump took his motorcade and went to Capitol Hill. Then, the Freedom Caucus takes their motorcade and they go back up Pennsylvania Avenue to the White House, and, it's very dramatic and very intense. But at the end of the day, the president relented and he said, all right, I will agree to sign a bill that takes away the mandate for essential health benefits. And at that point, moderates started dropping like flies, including my own congressman who's in a moderate district. That was when he switched his yes vote to no. So now the effect of that, there were still votes, still enough votes, but that 30 became even more and more and more important, and the leverage increased, and they got greedy. And they went back to the president and they said, the only way we can support this bill is if Title I is rescinded. And Title I is the one that has all the good stuff, like no discrimination against pre-existing conditions, allowing your kids to stay on your policy till 26. All the stuff everybody likes is Title I. And apparently the president just said, absolutely not. I campaigned on keeping those protections, and I will not relent on that. And he said, go back and vote. And that was Thursday, 2 weeks ago. They went back. They were doing their thing, behind closed doors, doing head counts. Paul Ryan realized he didn't have the votes. He delayed the vote on Thursday. They had this big, again, very dramatic closed-door Republican conference with Vice President Pence there and all these different people Thursday night. Friday, the president came out again and said, call the vote, have the vote. And so all day long, I was listening to the news, waiting for the vote. And about 4 o'clock Friday afternoon, the news came out that Speaker Ryan had gone back, motorcade back to the White House to tell the president that they didn't have the votes and that he was going to pull the vote. And in his press conference that day, his quote was, "Obamacare is the law of the land for the foreseeable future." And so here we are.
Wow. I mean, I think, what you've brought to light here and is, we all kind of knew that they didn't take it to vote, right? At the end of the day, they didn't have enough votes to get it done. But all those little pieces and parts that really got us to that decision, because you know what? Those are still going to live and breathe here as the discussion continues. And one of the questions that had popped up, clearly, Rand Paul in the Senate kind of has their version of what this thing could look like. And of course, the House, Speaker Ryan, I mean, they're pushing forth a specific, rule and law that they're trying to push forth. How do you see them reconciling? Or are they doing that today? Do you see them kind of talking to each other today to try to build a compromise?
Yes, they are. And really, President Trump is going to drive that bus to some extent because he's the executive branch. He's the leader. And he is, again, going back to the well just in the last couple of days and saying, we're going to revisit it. They have to do something, or why would anybody go back and vote for them? It was their signature thing. Rand Paul's very interesting. He's bringing a bill in the Senate. Rand Paul's belief is that this level of federal intervention in the private marketplace, which is, in the insurance market, and this federal mandating of personal behavior, he believes is unconstitutional. So he has a very defined philosophical issue with the whole thing, and everything he says springs from that. He's also, I believe, an ophthalmological surgeon or something, so he's a doctor, so he brings some particular insights into that too. So, I mean, you look at Rand Paul and you say, well, is he really going to get consensus? He does seem like he has a shot at that because of his belief in the unconstitutional nature of this. He wants to blow it up and start from scratch. He absolutely wants repeal and replace. Honestly, Steve, it's so complex. The moving parts are so complicated and interconnected. I couldn't give you an opinion in 2 minutes whether that's going to work or not, but I wouldn't say it's completely out of the question because what they just tried to do was incremental and it just did not work. So stay tuned.
Well, there are some very eager politicians there trying to certainly push forth their opinions. They all seem very strong-willed, but we do know that there is certainly willingness to compromise, and we certainly hope that at least the American citizens here will win at the end of the day.
Hopefully.
Any future decision, right? So thank you, Anne. Great information, and we actually have a few more questions, and I'm gonna just cover my couple things here real quick, and then we'll follow up here with final questions then in a final Q&A. But I did want to just bring up, actually maybe re-emphasize some of the things that Anne had mentioned, because we sat there and for how many weeks, right? The repeal and replace thing is going to happen, and it didn't happen, and so just what now? What should you be communicating with your employers, your prospects? What should you be telling them? And I just wanted to highlight maybe just a few items is all. And actually, Anne stated it very succinctly. Obamacare is still the law of the land, and one of the key, I guess, common questions that we get from our clients here at PrimePay, not so much from you as the benefits broker, but certainly our clients is, so, okay, I guess I don't need to do anything here now, right? I mean, didn't he complete that executive order? So, gosh, I mean, are penalties truly going to be assessed? Is the employer mandate really going to be enforced? And our answer is this. These requirements today still exist. And if that employer was determined to be an applicable large employer in 2016 based on their number of full-time employees and equivalents, then indeed in 2017 they're considered an applicable large employer and would therefore fall under that employer mandate. And so that employer is going to need to fulfill the requirements under that mandate. They're going to need to continue to monitor their eligible, their variable hour employees and certainly verify their eligibility, monitor them through their various measurement periods. The reporting requirements, when you look at enforcement of penalties, you have the employer mandate, right, which has a big penalty for those employers who do not offer coverage, and then there's another penalty if you do not make that affordable coverage for the employees. So you have those penalties, but I'm going to be honest, those can really truly pale in comparison to what the penalties can be if an employer fails or willfully fails to actually file their 1095s and 1094. So the reporting requirements are still very much valid, and you need to continue to reinforce that with your clients, that they, at least right now, continue going down that path and monitor those variable hour employees through those various periods, and certainly still fulfill those reporting requirements, which the deadline, folks, was March 31st was the last time to e-file there. So, but the IRS has stated good faith. So make sure that your employers are making that good faith effort. Secondarily here, there is certainly bipartisan support to remove the Cadillac tax. But just as if we had possibly hoped for a vote here 2 Fridays ago, we don't know yet what this status of the Cadillac tax or this excise tax is going to be. If you recall, this is that 40% excise tax on high-cost employer health benefit plans. And it was indeed delayed here until 2020, but, depending on how this moves and shakes, this could be in place. So you need to still talk with your employers, plan accordingly, strategize based on the cost of their health coverage here today and what's that going to look like here as it comes into 2020. So still a very valid conversation to have here with your employers. Also, compliance audits. All of this House and Senate and political back and forth has still caused the enforcement agencies under the Department of Labor, EBSA, and the IRS to continue their efforts. And actually, they've stepped up their efforts in the enforcement category. And it goes much beyond ERISA and, pension benefits, but it's now keenly focused on health and welfare benefits. And, the IRS can even audit for COBRA, not just the EBSA and the Department of Labor. And so, your involvement as the most trusted advisor here for your clients in this area, you definitely need to focus on document review. It's absolutely critical. And I'm going to touch on that here just on this next slide here just a bit more. And lastly, I do realize that many of your employers, many of your groups already have plans that qualify for an HSA, but there are still many employers out there today that have not moved in that fashion. So many employers do not fully understand or grasp what that health savings account means. How can I use it? When should I adopt it? What if I'm currently using an FSA? So how does an adoption of an HSA plan or a qualified plan interact with plans or benefit offerings that I have today? So equipping employers today with that HSA knowledge, but two, just the resources. Your agency needs to have that solution at hand. So when HSAs are expanded upon, have a dramatic effect even on traditional 401k plans. They're talking about expanding the limit or increasing the limit for HSAs, and even going as far as having a Roth-like HSA. So instead of putting in pre-tax money going in, it's actually, you're taxed on that money going in, but it comes out tax-free. So if an individual has the ability to be able to put money into an HSA or put money into a 401k, But with the 401k, all the money that's coming out is going to be taxed. But with an HSA, the money that's coming out for medical expenses is not taxed. Whew. Those HSAs have an extreme advantage. So I just want to say now is the time to begin to not only equip yourself with the extra knowledge and partnership kind of resources, but really starting to lay out a plan and a strategy with your employers. You know, I was thinking as right before here we go to Q&A and we wrap up here today, I was just thinking about, you know, all the recent stories and topics over the last 18 months that you read in every magazine, it seems like, or a business magazine about data, right? Using data, big data, so important. Well, it is very important. You know, when you think about an employer who wants to introduce a new marketing campaign for their particular product, well, they could develop a stronger marketing campaign if they use data, right? If they had researched, if they had gotten data from existing clients, customers to know what they want, desire, so on and so forth. And so data is very important in that example. You could also have an employer who is a manufacturer and on one of their lines, you know, they're running into a lot of defects and situations that's causing more, you know, just bad things occurring on that manufacturing line. Well, they could look at data. They could see what is causing that. How can they make this more efficient so that it's better streamlined and so forth. They use data. And what I want you to know is that there's actually a way for you as an agency to utilize data to maximize the results, not only that you're looking for you as an agency, but using data to help your clients, right? I think, you know, I hear from many of you that say, you know, listen, my clients think of me as a compliance officer, you know, and you know, compliance is a big part of your role. Well, where can you access data to help you more with your clients in this area? Compliance is indeed one of your biggest assets, and there's two sources that you can use to gather that information. Having your clients go through an ERISA wrap document process where they're adding ERISA documentation to their plans for the very first time, and also accessing that data out of your employer database. Yes, each employer, each client that you have has a database. And I'm going to actually tell you how you can access that. So first is ERISA wrap documents. You say, Steve, what are you talking about, ERISA wrap documents? Well, the beauty in going through an ERISA wrap solution with a client is that you take a deep review, and I say you, it's us as a certainly as an administrator, but certainly you as a benefits broker. You get to do a thorough review of all health and welfare benefit offerings. See, you might be the broker of record on a medical plan, or maybe you're just the broker of record on the ancillary business, not on the medical. Well, here is an opportunity that you're able to get a solid review of all health and welfare benefit offerings throughout for that employer. You get direct access into everything that employer is offering, and it uncovers quite a bit. When you go through this process, you begin to see that the employer actually established disparate language, you know, such as, you know, I have a 60-day waiting period for eligibility in my insurance certificate, but in my employee handbook, I have a first of the month after 60 days is what is listed. You know, that the information is wrong. So you uncover a lot of inadequate or non-existent document language. For many times, as we think about compliance and we think about going through the ERISA process, many times we find employers are funding their premiums or deductions, their plans with pre-tax dollars from the employee, right? So that means that employer must have a Section 125 plan. Well, through the ERISA kind of discovery process, we find, oh, you don't have a Section 125 plan document. And so not only are you going over the employer funding arrangements, but you're also looking at potential failures for that employer as well. So such things as Form 5500 filing that should have been done, but also you failed to distribute a summary plan description to your employees. And so this process really uncovers a vast amount of data that you can then turn, I mean, it sounds kind of negative, right? Maybe finding areas that your client is not doing in fulfilling their obligation. But you truly, as an agency, would be delivering strong value in bringing up these items so that that employer can easily sustain an audit that they may go through. So I had just shown here you have an employer database, and you say, Steve, employer database, what do you mean? Well, not all employers have an HR management system, right? They probably all have an Excel file as far as their database for their employees. But one thing that all of your employers have as a database is their payroll database. Yes. They pay their employees. Employees are their largest asset. And so they're going to run their wages, their compensation, their deductions, everything through that payroll piece. And I want you to begin to think about payroll not as, it's payroll, I don't know if they're happy or not, or whatever it may be. I don't really care what my employers use. But what you need to think about is where you can find your data is in payroll. And so I just want to bring up a couple things here before we wrap up. You know, you think about payroll, you think about the number of employees. You know, the number of employees says a lot about an employer and a lot as to how they need to comply with certain laws. You have employers who are 20 or more, right? So federal COBRA is going to apply. You have employers that are 50 or more, and you have now the FMLA. Family Medical Leave Act, that's now going to need to be complied with, or under ACA, the applicable large employer, the employer mandate aspects. So you might be involved in knowing the number of benefit enrolled employees, but do you actually have the detail that you need in regard to the full number of employees and the full-time equivalents? So very important, good stuff to have. Also, I hear a broker tell me all the time, oh, it's pain. It's a pain trying to get census information from my clients. Do you know that you can grab that data directly from payroll, that you can get that information direct? You can have access to that. Also, as you think about salary-based benefits, or maybe even benefit program designs, you know, you're trying to strategically find the best design or plan design to be a fit for your client. Well, in order to do salary-based benefits, you better understand what the average salary is, what would be the right amount and the maximums that I need to apply. Maybe you need to better understand the demographics of the group, you know, the average age and salary and locations and so forth. A lot of that information and data is found in payroll. Again, maybe you're focused as a broker, you're the broker of record on the medical plan, but not on the ancillary business. Here's a way for you to see out of the data within payroll, you get a better understanding of who's participating in the voluntary benefits. You might be able to better communicate what that employer may or should do based on how those deductions are being reflected in payroll. And then lastly, using data, using payroll to understand employee turnover and the COBRA situation for you to be more actively, or I should say, proactively involved in helping and assisting your employers through those various things. So it's, you know, data is a big deal, and I think if you think about the resources that you have as an agency, the partnerships that you have made with the likes of a PrimePay or other providers that you work with, these types of solutions or opportunities really enable you to dig deeper into a client to more fully understand their needs, their challenges, so that you can actually create better strategies and opportunities for them. Ultimately, you're trying to drive greater dependency on your agency, and this is one way to do that. All right, so Anne, I know that there were some additional questions that have come through. Were you able to see any of those?
Yeah, I was, Steve. Yes, I was. One of the underlying threads here that seems to be, you know, prompting a lot of questions is something we didn't really get to touch on or talk about a whole lot, is regulatory reform. Secretary Price is the new head of Health and Human Services, and he has been a congressman for many years and a very vocal opponent of the Affordable Care Act. And now he is in a position to implement a lot of regulatory changes. And I see that running through the thread in a lot of the questions, like what does that mean and what can he do? Fundamentally, what happens is the legislation is passed and then it is sent to the the bureaucracy, basically, the various departments, to add the rules and regulations to implement the underlying legislation. And that is no different in the Affordable Care Act, with this kind of an exception or kind of an observation. The Affordable Care Act is 2,700 pages long, and in 3,000 instances in the Affordable Care Act, you see the phrase, "the Secretary shall." And that means that the Secretary of HHS shall basically figure out what this legislation means and make up the rules for it. It's a very broad, it's an unprecedented latitude on behalf of a secretary of one of the departments to implement legislation and reform. So that's the bad news, is everything was happening through regulation. The good news is everything can be examined and either tweaked or reversed through regulation also. That being said, you always have the underlying legislation. So I think Steve commented earlier about there's no more checkbox that you have coverage on, when you're filing your taxes. That's a regulatory tweak, but it's not really a reversal of the individual mandate. It's just basically a non-enforcement. So you're going to get a lot of that, and I think Steve talked about that a little bit too, is you have to remember that the underlying law is still the law of the land and you still need to comply. Where I think for you brokers and for your clients, you're going to see positive relief is going to be in things like the reporting requirements, maybe even, how you calculate, you do your measurement methods and things like that that are really, really cumbersome, costly, and time-consuming for employers. Those things can be examined and simplified or reversed, really. And so I think your day-to-day, what relief is your employer going to see, that's what they're going to see. As far as the mandate, that's going to be, again, that's going to be more of a non-enforcement. The actual repeal of the mandate has to go through legislation.
Mm-hmm. Very good. I mean, there are some additional comments. You guys have made some great comments as well as questions. I think for the sake of the length of the webinar here today, there are a few other questions that I don't think we're going to be able to address, but we will get to you offline and make sure that we have a greater discussion, at least as it relates to those questions that you've asked. So don't worry, we will get back to you at least with those answers. So here just to, and so Anne, thank you so much for your comments here today. I know that as we prepared for this, it wasn't as if, well, we have all the answers here for everybody. We're just going to tell exactly, everybody what is going to happen, what they need to do next. And unfortunately, we were not able to do that. But I do hope that you were able, actually, everyone heard that we're kind of just sharing some of the nuts and bolts, some of the key pieces that will continue to linger on in the discussion, and that could ultimately transform the decision here down the road. And so, Anne, just thank you so much for participating here today.
Oh, thank you. I appreciate the opportunity.
Yeah, well, again here, thank you all for attending. Please keep in mind that we have recorded the webinar session here today, and it will be posted on our Broker Concierge YouTube channel here probably by Friday here of this week. I do want to share, even though we did start it out with the storm, I certainly hope that you do see some light at the end of that tunnel. There is sunlight. There's always sun above the clouds. And so there's always some good positive things that can come of it. And what I will say is this: you are in a wonderful position to be able to create opportunity engagement with your clients. And so we hope that you can take some of the content delivered today and really be able to describe, explain, be able to promote some of this information here, and should drive very good value add here for your clients. As always, please feel free to reach out to our broker concierge team at any time. We'd love to share more about what we're doing with our partner program and how we're actually able to drive more sales, more support for you and your agency. It really is a unique program, and would love for you to find out more information about that. Look for our webinar follow-up materials here in the coming days. We will provide that link to the recording. And for our broker concierge partners, you will receive a copy of our presentation slide deck, and certainly you have access to all of our complete library that's located within our broker concierge portal. We hope you can join us in our next webinar, which will be next Wednesday, the first Wednesday of May 3rd, where we're going to talk about, you guessed it, the HSA. We're going to tell you, kind of dive deeper into how you as an agency can really ride the HSA wave, and what are some key things that you and your agency can do to take advantage of some of these new regulatory compliance items that will certainly affect that specific solution. All right, with that will conclude our webinar here today. Have a great day, and we look forward to you attending our next webinar coming up soon. Thank you.